Morning traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 6th of November 2018, Melbourne Cup Day in Australia, midterm election day in the United States. And pretty much that midterm election is what dominated trade last night. A little bit of toing and froing in markets, but not too much. The Nasdaq was under pressure from Apple's continued funk, and also President Trump using that monopoly term in that Axios interview aired on Sunday night in the US. So that put the Nasdaq at odds with the Dow and the S&P, which were both up 0.5%, just about in the S&P, and 0.75% for the Dow. The Nasdaq, on the other hand, was down 0.4%, but it had been down 1% or thereabouts when I was writing my morning note this morning. What seemed to lift that was that there was a Rasmussen poll, one poll in many, that says that the Republicans have got a chance of holding the House. And that's really important. So it's important for the US dollar, and it's important for stocks. It turned stocks around, gave them a little bit of a bit more bid for the Dow and the S&P, and really turned around the Nasdaq. Why is that? Because if President Trump manages to help the Republicans hold the House, then that means his agenda continues. If the Democrats win the House and don't gain the Senate, which is the most likely outcome according to most polls and most pundits, then you get this tension between the House and the Senate and, of course, between President Trump himself. So that's kind of a mixed and potentially negative. If, of course, the Democrats won both the House and the Senate, unlikely as that is, then you'd see the US dollar come under pressure. People are worried about what's going to happen to President Trump, impeachment, all those kind of things. Anyway, so that's going to be really important. Elsewhere, US dollar a little bit weaker. It lost about 0.23 in DXY terms, and against the euro. Euro's at 114. Sterling held on to its gains about 0.5%. The Aussie was up about 0.15. Kiwi as well. Oil was down again. It'd been up earlier, but President Trump said we're going slow. The waivers are there. There's plenty of oil, and the technicals look terrible. Gold was down $1. Bitcoin's about 6,400. US 10s are at 3.2, so not a lot. Let's dive straight in. 2 minutes 17. We're going to go with the euro. If there's a chart that I'm looking at right now that is ready to break one way or the other, it is this chart. And if you have a look at it here, you can see this downtrend. It's trying to build momentum. If it can close above 1430 on a day basis, it can run. If it can get above 1460, which I think was last week's high, then it can... I don't know why those crosshairs are there. I don't want them there. Then it can run. So we will keep an eye on that. EU bank tests, ECB bank tests, I guess I should say, weren't special. Some of the biggest banks in Europe are undercapitalised in a worst-case scenario, according to the ECB. Italy's banks got belted, and the FTSE MIB was down last night. So there's still issues. Got to keep an eye on that. Not existential at the moment, but for the euro, it's really all about the US dollar and what happens there. So we'll keep an eye on that. If it breaks higher on those levels, obviously if it breaks down through 112.80, then my medium-term target becomes 108.20. Dollar yen is trying to build. Let me take that Fibbo off so you can get a better... Let's see if I can get rid of that Fibbo. Let's just delete that. You can get a better sense of it building for a run back to 114.50, 114.75. If stocks rally, that will happen. If not, then I've got support, down at these two moving averages, which is 112 sort of 50-70 region. Not a lot going on there. Governor Kuroda basically said yesterday, though, that the period of easy money is behind us. I thought the lack of reaction in dollar yen was really quite interesting in that regard. Sterling couldn't get up and through 130.65. That's the key level. A break and hold above 130.65 gets me 133 to 133.20. And then if you get through there, then I'd be pointing not at the 50%, but at the 61.8%, which is at the 137 region. Alternatively, if this whole Brexit optimism that we've had over the past few days gets scuttled, then we're back at 126.60 and 126.90, 126.60, and that needs to hold. If not, then 120. It's in nobody's interest for a Brexit deal not to be done realistically, particularly not the EU and not the Irish, because then they end up with this hard border regardless. So my sense is they're going to try and get a deal done, but whether or not it's a deal in a manner that can past the Commons is going to be the next big move. So announcement of a deal. Don't forget Theresa May talking to her cabinet tonight. So that'll get things moving. Sorry, Aussie dollar. I was looking at the WTI. Now, we've broken. If we can get above 60, we can run, and we can run to 74.40, which is ultimately based on the way it's set up now. That's my target. But as you know, I wouldn't be surprised to see a test back towards sort of 71.40, 50, just to test the break. That often happens. But if we can get up and through 60, then we're on our way already. And of course, 74.40 is the target. The RBA today should be very, what would you call it? They should recognise the inflation. They'll probably not, though. They'll probably say, things will be right. They have been endlessly Panglossian. They should be cutting. They have got housing under control. They've got lending under control. House prices are falling. We are going to have a wealth effect. I've written about it in Markets Morning. I won't bang on about it. RBA should be cutting. That would put downward pressure on the Aussie. Any hint that the RBA is going to cut, which would be a big turnaround, but they've done things like that on Melbourne Cup Day, and they can explain it on Friday in the Statement of Monetary Policy, will knock the Aussie back. I would not buy Aussie if the RBA is hinting at rate hikes, because it's going to get absolutely belted, and we'll be talking about 68.5 in 3 days' time. Not in 3 days' time, but, when we get the Statement of Monetary Policy. Anyway, so it's a big event in the course of the day, what the RBA says. More likely than not to be consistent with what they've said recently, which is, she'll be right, she'll be right, she'll be right. But there is a chance, I think, that they'll recognise that inflation number last week and talk about the wealth effect in housing. What do we got here? We've got dollar CAD. Dollar CAD is still correlating reasonably well with oil. Oil was down last night, so the CAD lagged, which meant that dollar CAD is up. It's still got to take out 131.70 if it's going to kick on. It can kick on to 133 then. You can see it's kind of holding the trend line. I'm not going to redraw it, so we'll wait and see what comes from there. And then the Kiwi, if I can find it, everything's moved around. I've added an extra chart. Kiwi's broken out as well. So what's that? I don't know what that's doing there. That should be down here. Maybe when I change the charts at all. So we've got, similar to the Aussie and the Kiwi. Kiwi broke first. Obviously, it had a false break, and now it's kicked on. So these are actually reasonably bullish kind of outlooks for the Aussie and the Kiwi. Which implies some sort of bear outlook for the US dollar, which is really interesting. 67.90. Maybe, this is all supposition, but, maybe that high turnout we've seen in Texas, more pre-votes than total votes. So more pre-votes for this midterm than total votes for the last midterm in Texas. That's the data that I've seen float past. And the reality about that is that a lot of young people, so people are expecting that means they're Democratic voters. Now, that doesn't mean Ted Cruz is going to lose. But what it does suggest is something about what's going on in the dynamics of elections in America. I can't pretend to know from here, so I won't. I've just given you those three different outcomes and what they mean. So we'll keep an eye on it. Anyway, but a bearish outlook for the for the US dollar puts the Kiwi back up to that 68.50 zone, which has been really important support and then resistance, if you recall. Now, dollar yuan, I forgot to talk about dollar yuan yesterday. If you have a look at it on a weekly basis, I'm just going to give you all three timeframes. So look, we've reversed off. Now, that data yesterday was appalling. The Aussie held up, even with that appalling Chinese data, which is really interesting. So here, we've got this. We've got a reversal. And you know what I say about vertical markets. I hate them, right? And you've seen that vertical, and then we've seen this sideways, right? So now we're starting to roll over. I wrote to myself that 660 via 669 is a real chance. Now, that makes no sense given the data, but that's what the texts say. You've got to take out 98 to 7 to really kick high. Now, you've seen it's broken down, and we'll see where it goes over the next few days. Very much US dollar driven. President Xi's speech yesterday was really interesting insofar as that it was quite aggressive in a pushback towards the US, but also quite conciliatory. The Chinese would love to get a deal done. I think they would see that as a victory because the longer this goes on, the more that decisions will be made. A fella on Your Money yesterday afternoon when I was talking to Leo Shanahan, I've forgotten his name and where he's from, James. I can't remember his surname, so I do apologise. But he made the point that Cummins has just made a decision to move production from China to India. That will resonate with the Chinese. That's the kind of thing that forces them to the table. Now, President Trump would have preferred that they came back to the US, but it's incumbent on business owners, not incumbent, but this is the way they work, to actually find the lowest place to build. So that's why they're in China in the first place. It's not about proximity to Chinese consumers. It's about proximity to cheap Chinese workers. Anyway, Gold, still in this range. Still got a break. It still looks like it's going to 1252. It's got to break 1252 to get really bullish towards 1300. But unless it breaks 1252, not going anywhere. Bit of a sideways range there over the last few days. Copper, well, you know, blow me down. I think I'm just going to call that a range now. But 2 point something percent up, 1.75% back. You know, what happens in volatility? And this is really important from a trading point of view because, you know, whether it's copper or it's the VIX or it's the SPY or the S&P or the Dow or the NASDAQ or, you know, a currency, Turkish lira or whatever, periods of volatility mean that people move to the sides. If they're a big trader, the risk manager comes in and says, hey, Greg, I've got to reduce your risk because the VAR measurement says that there's a chance of, you know, the chance of a 1 or a 2% or a 3% move is actually increased, so I've got to give you smaller limits on that asset. So limits come out, which means things become more volatile. That's how these things work. Also, limits come out because people step to the sidelines because they're not sure what's going on. So you do get whippiness. This is indicative of a thinner market and whippy trade. So I'm going to call it 286.50's got a break. If 286.50 breaks and you got to 290, 293, 293 breaks, then it's a whole nother story. That would need an end to the trade tensions and some expectation about improvement in global growth. It may happen. Keep an eye on it. At the moment, otherwise, I'm just going to call that a box. Now, the big movers in global markets right now are oil. And as you can see, we are still trending lower in oil. Now, I showed you yesterday on the different charts where we are, right? So this is just brief, just quick and dirty, as they say. So 59, maybe even a little bit lower. That's not drawn in exactly the right spot, but around 59 would be the target at the moment, the way it looks. Chai Girl, who I follow on Twitter, has got a support right here and right now. So it's either got to bounce or it's going to fall to 59. My sense is it's going to fall to 59. It's starting to look a little bit oversold, but it's still within the Bollinger Bands. But the thing about Bollinger Bands is that they reflect volatility. When there's no volatility, they shrink. So you get outside the Bollinger Bands and people go, oh, we're outside the Bollinger Band. But there's been no volatility. They expand and contract with volatility. So in many ways, they're pro-cyclical. So yes, they work, and I use them as part of my toolkit when you get too far outside, but it's mostly when you've got a vertical move. The question is this a vertical move? On a weekly basis, yes, it's a vertical move, which is a warning. But we haven't had the pessimistic crescendo yet, and the market's still long. So that's the thing that will change my view. Any rallies are to be sold unless we see something change. Now, we could see there is a monitoring committee for OPEC this week. They're probably going to say, oh, we think we should cut supply. But if that isn't a tacit admission that there's enough oil on the planet, and don't forget, President Trump said last night, the sanctions are going slowly so as not to disrupt the oil market. Now, we heard from Halliburton that pipeline bottlenecks in the Permian will be gone by next year. We heard from the Iraqi Kurds yesterday, I forgot to mention, I apologise, that they are getting pipelines sorted out so that more production can come to market. So, and then of course we've got the Saudis, the Russians and the Americans all pump, flat out. I know that shakes the camera, I do apologise. But anyway, so that's what you've got. And then you've got a failed retest back up here. So that's Brent, obviously, $70 or thereabouts is my target for Brent. Turning to stocks now. Not much on the S&P. That does suggest, you know, the normal way that I use MACDs, which is simply, I'm just using it as a momentum tool, right? So when the MACD, so I'm using my MACD histogram is a visual representation of the spread between the two moving averages. Now, here I've got 15 and 30, yeah, but you know the normal ones are 12 and 26. Why do I use 15 and 30? 15, 30. That's why. So what I'm doing here, I never use the signal line. It's not part of my toolkit. Why am I using? The momentum is the expansion or the contraction of the moving averages. When I see a turn in the momentum, that's when stops come up to market. So think about everything I say every morning. It's about trader behaviors, isn't it? There is something, trend lines. What are people watching? Fibonacci's. What are people watching? MACD. What's going on there? You know, that's why I don't use the 200-day moving average. I know people use it, but there's nothing. I'm not into mystical stuff about charts. You know, it's got to have a practical behavioural basis around what people are looking at before I look at it. Anyway, enough of that. I tried to do this fast today. Right, so inside range. Got to break that ugly candle Friday before we're going to go anywhere. NASDAQ, which is the key. Where is it? I forgot to look at silver. We'll talk about that tomorrow. So we're trapped here, 68.56. If it gets down through 68.56, it can run. It's got to get up through 71.58. Otherwise, 1, 2, 3, 1, maybe down. Maybe we're going back. Unless I see above 71.58, I'm going to say we're going to see back at 6,800, back towards the lows. We won't worry about the Dow Jones. We'll have a quick look at the S&P because I know it's Melbourne Cup Day and election day, so you're going to have limited time. We're trapped. Right, 58.79, 57.68. Oh, can I get some feedback, folks? I'm thinking of changing to my smart markets charts, which are not futures-based, which are cash-based. If that would make things easier, please give me a shout-out. I've had some feedback that some people are trying to, they can't get the SPY back to the futures and they can't get the futures back to the S&P and all that kind of stuff. I'm happy to change if that's what people like. I like futures because they trade, but I know that cash adjusts. Problem with cash adjusted is they never see a gap. Anyway, right, so that's what we got there. We're trapped in that range. And the DAX, which I haven't even looked at today, I'm sorry, folks. All right, so this sets up like the NASDAQ, doesn't it? 1, 2, 3, 1, maybe back towards the lows. 11.7, break and hold above 11.7, 12.5, then we go. Bitcoin's at, what is it, 6,400, not going anywhere. US 10s are at 320. So keep an eye on things. The election's really very important. RBA today is also really important. Then, of course, we've got the RBNZ and we've got the Fed later this week, plus some data. European PMIs could be an issue tonight. China PMI yesterday was weak. European PMIs, the composite bits, could be weak. Have a look at Markets Morning, the relationship between Germany and Chinese PMIs. Big shout out to David Flanagan at Curve Securities. He first alerted me to those kind of relations, German factory orders tonight too, those kind of relationships 5, 6, 7 years ago. Anyway, have a good one. Bye for now.